Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, pretty big move today in the markets. Is this the blow off top, or we got another 100, 200, 300 points higher to go? We're going to show you a chart that's going to be pretty interesting, rare occurrence on charts as far as we're concerned. So let's dive in and check it out.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob. So really upsized move, and a lot of metrics here are just saying way overbought. But everyone keeps getting rewarded by buying the highs because it keeps going higher. So what say you?
So this is the day before OPEX and 4 days before the expiration of the volatility contract for the month. And so we actually gone to over 2.3 standard deviations, Phil, on a daily chart. And for an index to do that is extremely rare. And if you know anything about, channels, is that when you have standard deviation moves like that, you're looking at probably close to 93% chance that is going to cave back in towards the center line. And that center line is sitting at around 422, which would represent a 200-point drop, in the S&P 500. And so I think now we're going to probably say maybe today's the blow off top, because we're seeing readings of hundreds of millions of dollars of hedges coming off now with this move. And usually when the hedges come off, it usually means we're done and there's no need to protect the position anymore. And the market makers are free to short versus trying to continue to go long, Phil. So my view is that if it's not today, OPEX usually is kind of flattish. And I think we just blew this thing way out. Usually Thursdays after a Fed meeting and Thursday of OPEX is usually a red day. That is obviously not what happened today. And so there's probably some imbalances that may have to come off tomorrow to the short side. And then Monday's a holiday, Phil. And we have Tuesday, and then first thing Wednesday morning, I think the OPEX for volatility happens. So I think there's very few days left for people to enjoy this move higher. And so I would have to say, if it's not today, I would say Tuesday, and then we'll just have to see if I'm right. But this is pretty unusual what we've done here.
Yeah, this was very similar to August of 2022, and that was, we had the same condition, I think, where we were popping out over the linear regression channel there. And what happened was we ended up making a high within a day, and then we chopped around for a couple days, and that was the beginning of an 800-point drop. And so the conditions are very, very similar. I would say that the only thing that we need to see would be the liquidity indicator go risk off, which we haven't seen since mid-May. And I think a lot of people miss that point, because a lot of times we talk macro, and, a lot of what we're saying on the main headlines as far as warning you guys down the road is really what we're looking to see manifest from July on. Here, we're in a situation where as soon as that liquidity starts to roll over, and a lot of this has been driven by derivative pinning, right? And even this is over the pin point, right? Because that's the call wall. For you guys don't know what that is, that's where most of the calls end up going, and any move over that is basically fighting the current against what the dealers are doing. So that currently would be at 44.47 on the futures on ES, or 4,400 on the SPX. So Bob's right, you could easily snap back down to that level tomorrow. Is it at the top? That, like I said, you could chop around for a couple, 3 more days and then roll over. But I agree with you. It's a very outlier move that we're seeing here. This whole move up actually has been kind of an outlier, especially when you have things like pushing over the derivative call wall and things like that. It's just, you don't normally see that stuff. If you do, it's a little poke over and then it comes back in, not, 50 points higher. kind of stuff. And it's just been like this last couple of weeks. But from what I've gathered, this is the most hedged OPEX that we've seen. And I think it's because we had FOMC this week too. And now we're seeing those hedges come off. So if we're right, then you get kind of like the Eiffel Tower effect here, and you'll get a swift pullback.
Yeah, and you have a new bull market if economic conditions are warranting it, but you usually don't get one when you're going into a recession. So usually these are blow off tops. So that's the expectation, at least at the moment.
Yep, and the earnings, I think the earnings price to earnings ratio definitely is saying that as well. So, all right, guys, well, that's going to do it for now. Let us know your thoughts. Do you think we're going higher? Do you think we're going to go lower from here? And we'll see you on the next video. Take care.